Hello, everybody, and welcome to the Open eCrime market commentary for the week of October 7th. My name is Toby Gennaro from Trade with Precision, and we'll just be taking a look at what's on tap for the markets this week. So getting to the charts then, looking at the S&P 500, so we're looking at the ES futures contract here on the monthly chart. We'll start from the higher time frames, work our way down, and see what's in store for us this week. I have a fairly bearish candle, even though we put in still a higher high for the last month. The month of September started a new candle here for October. Relatively nice sell-off there at the top, and got kind of a bearish candle set up right there. We haven't broken the low of that candle, which is still quite a ways down there. It looks like the low is right around 1630, 1631. So we've got a ways to go until if the market even pulls back that far. But really still looking for that pullback on the monthly chart, but doesn't really look like we're getting it here based on the weekly chart. We have a nice bullish candle right there in the buy zone, which is what we like to see. As you can see from a lot of these bullish candles in the past in the buy zone, it's just put in higher highs. So if we can get a break of this level this week on the weekly chart, and that level is 1692.25. If we can get a break of that level here, then it looks like we might be taking a run maybe at the latest high. And as we're looking down here at the daily chart, just have a Fibonacci retracement drawn in between the most recent swing low and then the most recent swing high. And that pullback level puts us in right around that, just right around that 1664 level, 1665 level, which is pretty much where the market pulled back to. Got a pretty nice bounce off of that 62% retracement. And then based on some of the news that came out over the weekend, it looks like there's going to be some more debate about a negotiation around the debt ceiling here in the U.S. and the government shutdown and those kind of news headlines. So that's never going to be good for the markets based on that kind of uncertainty. So the market really opened up here kind of down on Sunday evening. So it looks like if it doesn't pull back here before Monday, we'll have an opening gap on the first thing Monday morning. So if we go down to some of the other time frames, we can see that the moving averages are rolled over here. I've got the 50, the 20, and the 10, and we've got some bearish candles pointing to the downside. As we move below that, the 240 and lower, things are looking still pretty bearish here. We don't really have any signs of a bounce just yet. If we were to get a retest of this level at basically that 1663 level, we'd have to take a look at what the charts is. If we see some strong divergence picking up on some of these time frames, then we might get a reversal pattern and a bounce off that level. But for right now, it's not looking like that. I would venture to say we'd probably have maybe some divergence here on the 480, but it didn't look like there'd be anything setting up on the 240, and then we certainly wouldn't have it on the daily chart. So still looking at some of this divergence here on the weekly chart, which is pretty strong. If we were to get a run back up to the recent high and then put in some divergence on the daily, I'd definitely be looking to look for some shorts then off some of those high levels, especially if we got back up to that, what was it, 1726, I believe was the high. Yeah, 1726.75. But for right now, things are looking pretty bullish. If we can get a break of the high of last week's candle, I'd be looking to get long on some of the lower time frames and follow that trend right back up to the top. So that's really what things are looking like here on the ES for the upcoming week. And moving over to the small cap stocks on the Russell 2000, looking at the Russell contract, a little bit more bullish here on the monthly chart with that candle that closed out in September. Very bullish there. We have broken the high of that. Let's see. The high is at 1080.20, and we're right there at 1086.80. So we do have another higher high on the small cap stocks. So still have some overextensions. Again, still looking for that pullback in the monthly chart. Haven't had it since way back here at the end of last year. And then on the weekly chart, a little bit different. Don't have as much of a pullback here, not even back to the 10-period moving average, but there is a level right in there that the market's been flirting with right around at 1060. So as we move down on the charts here, we do have a pullback into the moving averages on the daily chart, but still have yet to see a very bullish candle at that level. So I think I'd still be looking for maybe a little deeper pullback here. If we go down to the 480 chart, we've got a fib retracement drawn in right at this level here. One of the swing lows right around 1050, back up to the swing high, and that puts us in that zone right around the 62% level, right in there around 1063, which is pretty much where where we had that pullback a little bit beyond that, and then got a pretty nice bounce off of that. And so we still don't really have a bullish candle setting up just yet, but we do have basically a 50% retracement of that swing low move back up to that swing high right there. And so we could be getting a bounce right off of this 1066 level, going back up to the top. But for right now, I'd be looking for possibly a little bit more of a deeper pullback, at least back to the 10-period moving average, and looking for some kind of a setup candle in and around that 10 and 20-period moving average, since that's what we've had several times here before, just looking at the history of the price action. As we move over to some of the lower time frames, we have looks pretty indecisive, and I think there's a lot of indecision in the market just based on some of the headlines that have been coming out of Washington and what's going on there. I don't think investors are looking to see anything resolved on the government shutdown here in the coming week, unless something unusual happens. So with uncertainty like that, you're going to see a lot of indecision and a lot of randomness in the markets. So I'm really just kind of biding my time here this week, looking for some intraday trades. We've been getting some nice diverging setups, some nice scalps off some of the lower time frames, and so I've been looking for those on an intraday basis, and then just waiting for these charts to set up for a higher time frame swing trade. So just still cautious here on the Russell contract, cautious on the small cap stocks. Then just one other consideration here, looking at the U.S. index markets, looking at the Technology 100, the NASDAQ. As we can see, we got the same setup here on the monthly charts, and then on the weekly chart looks very much the same as the Russell contract. I mean, everything looks very bullish here. But as we get down to the daily chart, we've got the most recent higher high in here, the swing high, and we've also put in a lower high on both the MACD and the RSI. And so even though we're pulling back into the buy zone there and getting at least that one bullish candle set up, as we move down to the 480, you can see the higher high here and the higher high here. Then you can see that we're putting in some severe lower highs on the 480 chart, and this kind of ripples all the way down. So it tells us that we could be getting some pullbacks, down around these levels down here a little bit deeper, probably down around that maybe 3180 level would certainly be reasonable, possibly something down around even the 3155 level. Let's take a look at some of the lower time frames, see if there's anything different here. Really a sideways consolidation here. Charts are pretty mixed up, but we do have looks to be a little bit of a flat level there setting up. So potentially we could be getting a rollover here. We have some slight divergence there, but overall on the 60-minute chart looks to be converging fairly well. So it looks like there's a little bit more downside in this market potentially. There might be a retest of the bottom here at that 3189 level. So not as bullish as the ES was looking, and still looks quite indecisive, along with the Russell contract as well. So it'd still be very cautious on the NASDAQ. A lot of divergence. Looks like there's more downside to this chart than there is upside. So I'd be aware of that. I've been trading basically a lot of these U.S. indices from both sides, short and long, in the last couple of weeks for just on an intraday basis. So I think that's probably still valid here until we get a little bit more clarity on what's actually going to happen with the U.S. government and some of the debt restructuring that needs to occur. And that'll wrap up the outlook for the U.S. indices for this week. I'd like to thank you all for watching the OpenECRI market commentary for the week of October 7th, and we look forward to speaking to you next week on the Market Update.